Welcome back to Talk Tickers, where we like to dig into the most interesting earnings calls of the week. This week, well, we're diving deep into Medtronic's Q2 2025 performance. We got the transcript, obviously stock info, and you probably got some of your own notes, so we're here to pull out the interesting stuff and see what it all means.
Yeah, absolutely. We're going to be looking at, Medtronic's momentum, what's driving their growth, and, the things that you as an investor should be paying attention to.
First things first, the stock actually closed down almost 3% after this earnings release. Kind of surprising considering they beat expectations and even raised guidance for the year.
Yeah, it is interesting. It suggests maybe, expectations were really high or there's some underlying concerns about, the longer term outlook. But we should probably look at the details before we jump to any conclusions, right? I mean, Medtronic has delivered 8 consecutive quarters of mid-single-digit organic revenue growth. That's pretty impressive, especially given how crazy the market has been.
Yeah, so that's consistent growth. What's their secret sauce?
They keep saying the word innovation, and it seems to be more than just talk. Their investments in R&D are paying off in a lot of their key areas, like TVR, leadless pacemakers, diabetes tech. Really, it's across the portfolio. They're not just tweaking their old products. They're creating new solutions for real healthcare needs.
Right, okay, so let's get specific. Their structural heart division, particularly the TVR franchise, is looking like a star performer.
For sure. The Evolut FX Plus launch in the U.S. is a big driver. And remember that SMART trial data showed, superior valve performance, especially in smaller patients, which is a big differentiator in the market.
Yeah, that's a great point. It's not just new products, it's proving they're better too. What about cardiac ablation solutions? It seems like they're riding this pulse field ablation wave, the PFA.
Yeah, they are. And Medtronic is actually the only company offering both single shot and focal PFA catheters. So that gives them a competitive edge in this market, which is growing like crazy. And their Pulse Select single shot catheter, they're seeing really strong demand, even with that temporary supplier issue they had.
Right, that supplier problem seems to be behind them now. But what about their new FDA-approved Affera system? Is it living up to the hype?
They seem pretty optimistic. They think the Sphere 9 catheter, which is a part of that whole mapping and ablation system, it's going to be a game changer. They're designing it to replace competitor catheters for both mapping and ablation, so
Right.
potentially more revenue per case. They're being strategic about it, though, starting with those high-volume centers in the U.S.
So it's that classic land and expand strategy. And while we're talking about expanding, their diabetes segment had a huge quarter. Double-digit growth.
Really impressive. And that's even with, tough comparisons to last year's 780G launch here in the U.S. So strong CGM sales and more people adopting the 780G are fueling this. Plus, they got that new FDA clearance for their InPen app. So that paves the way for limited release of the Smart MDI system. They're really offering more options for patients with diabetes, broadening that portfolio.
Seems like they're covering all the bases there. Let's shift gears a bit to something completely different, hypertension. They talked a lot about the Simplicity blood pressure procedure. What's the latest there?
This is where things get interesting. Remember, this procedure is for people with, resistant hypertension, so those who don't respond well to medication. Big news is CMS finally approved outpatient transitional pass-through payment starting January 1st.
That's huge for Medtronic. Removes a big barrier for patients, should really help adoption. Did they say anything about how big the market is?
They did, and it's enormous. They said that uncontrolled hypertension affects over 1 billion people around the world, almost half of U.S. adults. Direct cost to the U.S. healthcare system, somewhere between $100 billion and $200 billion every year. So it's a big public health issue with huge economic costs.
Yeah, puts it all in perspective. So Medtronic has this potentially game-changing treatment for this massive market, and now a better reimbursement situation. That's a powerful combo.
Absolutely. It'll be interesting to watch how it all plays out. We shouldn't forget their established businesses, though. Those still make up a big chunk of revenue.
Right. How did they do?
Pretty good overall. Solid mid-single-digit growth. Cranial and spinal technologies did really well, 6% worldwide growth. That was driven by their ABLE ecosystem. Think AI-powered pre-op planning, robotics, navigation. It's all that cutting-edge stuff.
So not just new products, it's using technology to improve the old ones, getting better surgical outcomes.
Yeah.
What other cardiac rhythm management business?
Another solid one. Mid-single-digit growth overall. Their Micra leadless pacemaker franchise, though, grew like crazy high teens. This minimally invasive tech is really catching on. It fits in perfectly with that trend towards less invasive procedures.
Seems like things are going well across the board. But what about their synergistic businesses, the ones they're really counting on for future growth? Anything stand out there?
Neuromodulation was the clear winner. Growth accelerated to 12%. Their Inceptive closed-loop spinal cord stimulator, it automatically adjusts therapy. It's changing the game for chronic pain treatment. And their Percept RC with BrainSense technology, that one records brain signals. It's revolutionizing treatment for movement disorders, Parkinson's, for example.
So using technology to address all sorts of neurological conditions. Anything else worth noting in that segment?
Cardiac surgery grew by 10%. Driven by innovative products like their Avalis ultrasurgical valve and the Penetra LAA exclusion system, acute care and monitoring, that saw 3% growth. Their Nellcore pulse oximetry had a pretty healthy increase, 9%. And, pelvic health accelerated its growth to 5%.
Wow, so it's a pretty positive picture all around. Let's switch to the financials. They beat earnings guidance, but any mention of margin pressure?
They did say there were some headwinds from, foreign exchange, but gross margins are actually up if you adjust for currency. They're working on improving margins. Taking a multi-pronged approach, think productivity gains, pricing discipline, leveraging SG&A. So it's not just about growing revenue, but also boosting profitability.
Glad to hear that. And what about their outlook for the rest of the year?
They're projecting a high single-digit adjusted EPS growth for the second half of FY25. And, they're still committed to that durable mid-single-digit organic revenue growth, with EPS leverage over the long term. They're striking that balance between, investing for growth and delivering shareholder value.
It's a long game. Any updates on their M&A strategy or portfolio management?
They mentioned looking at, tuck-in acquisitions in areas that fit their strategic focus. So basically boosting their existing growth areas. On the portfolio management side, they're constantly evaluating their businesses, making sure they're, aligned with their mission and can deliver sustainable, profitable growth.
So strategically positioning themselves. But given that the stock dipped despite all the good news, what are your initial thoughts on how the market reacted?
It's a bit of a head scratcher. Maybe investors were expecting even more aggressive growth or have concerns about, potential headwinds like a stronger dollar, rising interest rates, maybe even competition heating up. It's worth digging deeper to really understand what the market's thinking.
That's a great point. Sometimes the numbers don't tell the whole story. You have to understand expectations.
Exactly. But we shouldn't lose sight of the big picture, right? I mean, Medtronic is delivering consistent growth. They're investing in innovation. They're clearly committed to shareholder value. Now, before we jump into our This Is Not Financial Advice segment, what were your takeaways from all of this? What stood out to you?
I think, what strikes me is that Medtronic isn't just a medical device company, right? It's like a technology company operating in healthcare. They're leveraging AI and robotics and data analytics, not just to create these new solutions, but also to improve their existing products and make surgery better. I think they're in it for the long haul, and that's pretty compelling, especially as an investor.
I totally agree. That focus on using technology to, address those unmet needs in big markets like, hypertension and cardiac ablation while also improving their existing businesses, it's a really powerful strategy. It sets them apart from like your typical medical device company.
All right, so let's have some fun now and explore a hypothetical scenario. This is not financial advice segment. We're going to, come up with an outrageous but still plausible trade idea based on what we've talked about today. Remember, though, this is just for fun.
Right. And everyone, we're just spitballing here. Don't take this as a recommendation to buy or sell anything. Do your own research. Talk to a financial advisor before you make any investment decisions.
Okay, disclaimers out of the way. So we were talking about Medtronic's commitment to innovation and their move into high growth markets like, hypertension treatment and cardiac ablation. They seem to be aiming for that sweet spot, addressing a huge need with cutting-edge technology.
Yeah, exactly. They're not afraid to, shake things up and create whole new categories in healthcare. It seems like their long-term goal is to be a leader in those new areas.
Right. So for our outrageous but plausible trade, let's say two things happen. First, Medtronic wins big with the FDA. CMS approves broad coverage for that Simplicity renal denervation procedure for hypertension.
Now, that would be huge. It would open the floodgates for patients and could create this multi-billion-dollar market for Medtronic. Think about the impact on their revenue and earnings, right? If this procedure became the standard of care for resistant hypertension.
All right. And second, their new FRA mapping and ablation system, let's say it takes off, does even better than they expected, starts grabbing market share, in that cardiac ablation space.
That's pretty aggressive, but not totally crazy. The Sphere 9 catheter does what they say it can and delivers both clinical and financial benefits. Doctors are always looking for ways to work more efficiently and get better results. So a system that, streamlines things and maybe even increases how much they make per case would be really attractive.
This is where it gets interesting. So now they've got these two wins. Medtronic's growth story gets even more compelling. They're exceeding expectations, disrupting big markets. What do you think the market reaction would be?
I think investors would definitely notice. The ones looking for, high growth opportunities, particularly in healthcare, I think they'd be jumping on board. The stock could see a serious re-rating as the market realizes the potential of these two events.
Right, and that brings us to our outrageous but plausible trade idea.
Yeah.
A long-term call option on Medtronic stock, with a strike price way above where it's trading now.
Now, that's a bold move, but it could pay off big time if those two things actually happen. The stock could take off, and that call option gives you leveraged gains, multiplying your returns.
Of course, there's risk. If those things don't happen, or Medtronic stumbles somewhere else, the stock could just sit there, and you lose everything on the call option.
Which is why, again, this is not financial advice. Purely speculative, hypothetical scenario. Don't invest money you can't afford to lose, and, always consider your own risk tolerance before you invest.
Exactly. Think of it as a thought experiment, right? We're just showing you how to think about these potential catalysts and how they could turn into trading opportunities.
Mm-hmm. Always do your own research, consider your risk tolerance, and talk to a financial advisor before you make any investment decisions. So that wraps up part 1 of our deep dive into Medtronic's earnings. Be sure to tune in next week for part 2, where we'll continue our analysis and explore some other interesting things about this company.
Thanks for listening to Talk Tickers. We'll be back with more insights soon.
Welcome back to Talk Tickers. Last week, we started our deep dive into Medtronic's latest earnings call, breaking down their performance and, highlighting some potential catalysts.
Yeah, we dug into their impressive growth across, a bunch of segments, from diabetes tech to neuromodulation, even explored that bold move into the hypertension treatment market with that Simplicity procedure.
And we also, we left you with that outrageous but plausible trade idea, focusing on those two catalysts,
Yeah.
wider CMS coverage for Simplicity, and how successful their new Apria system could be.
Right. Of course, that was all just hypothetical, not financial advice. But today we're gonna shift gears a little and look closer at Medtronic's overall strategy.
They've been talking about this portfolio management and focusing on, those higher growth areas. So what exactly does that mean, and how are they putting it into action?
Well, it seems like they're doing two things. First, they're doubling down on innovation, especially in those high growth markets we talked about: diabetes, cardiac ablation, neuromodulation, and, hypertension.
Right. And they're not just, throwing money at R&D. They're really thinking about where they invest, targeting those areas with big unmet needs and the potential to shake things up.
Exactly. Like that Simplicity procedure, right?
Yeah.
It's a minimally invasive alternative to medication for those folks with resistant hypertension. Huge potential market. And now that CMS reimbursement decision could really speed things up.
And don't forget for diabetes tech, the 780G system is doing great, and they're giving patients even more options. It's clear they want to be the leader in this space.
But it's not all organic growth. They're also looking at acquisitions to boost those key areas. They want companies with, technologies or products that fit right in and can be integrated quickly.
It's a smart move. Add new stuff without the headaches and risks of those big, mega mergers.
Exactly. But the other part of this portfolio management is, maybe getting rid of some of their older businesses, the ones that aren't growing as fast or don't really fit their vision for the future.
Yeah, that's where it gets interesting. Medtronic hasn't said exactly which businesses they think about divesting, but they're definitely open to making some big moves.
So what could be on the chopping block? Which of their businesses might not fit in?
Tough to say for sure, but we can guess, right? They have a ton of businesses, everything from pacemakers and heart valves to spinal implants and surgical tools. Some people think they might get rid of some of those more established businesses like cardiac rhythm management or surgical technologies.
Yeah, that makes sense. Those businesses are still profitable, but they're facing a lot of competition and maybe don't have the same growth potential.
Right. They could also, maybe spin off or sell some of their smaller, more niche businesses, the ones that aren't really core to what they do. They need to make sure everything they do is helping them reach those long-term goals.
So it's like they're playing chess, moving their pieces around to set themselves up for success down the road.
Mm-hmm.
But why are they doing all this? What's behind this shift?
I think it's a few things. Healthcare is changing fast. New technologies and treatments are popping up all the time. Patients want more personalized and less invasive options. And there's more competition than ever.
It seems like they know they can't just sit back and relax. They've got to change and adapt to stay ahead of the game.
Yeah, exactly. They're embracing innovation, going after strategic acquisitions, and streamlining their portfolio. They're not just reacting, they're trying to shape the market.
And they seem to be thinking long term, not just about making a quick buck. They're trying to build something that will last.
For sure. Innovation and strategic portfolio management means they're setting themselves up to be a leader in healthcare technology for a long time.
We'll have to see how these moves work out, right? Will they be able to pull it off and reach their goals?
Well, that's the big question. But one thing's for sure, Medtronic is definitely a company to keep an eye on. They're not afraid to take risks, and they're clearly committed to growth and innovation.
Okay, so that wraps up part 2 of our look at Medtronic's earnings call. We've talked about their performance, their strategy, and, even tossed around a crazy trade idea.
Just remember, this is just our take on things. Do your own research, talk to an advisor, all that good stuff.
We'll be back next week for the final part. We'll wrap things up and leave you with some thoughts on Medtronic's future. See you then, and thanks for listening to Talk Tickers.
All right, welcome back to Talk Tickers for the last part of our deep dive into Medtronic's Q2 2025 earnings call.
We've gone over a lot, haven't we? Their impressive financials, their focus on high-growth areas, diabetes tech, cardiac ablation, that hypertension treatment. We also spent some time on their portfolio management strategy, right? Investing in innovation and maybe getting rid of some of those older businesses.
And of course, who could forget that this is not financial advice segment, where we came up with that hypothetical trade based on CMS coverage for simplicity and the success of Afera.
Right. But today, well, let's step back and look at the bigger picture.
Yeah, what does all of this, their performance and strategy? Tell us about where Medtronic fits in this, crazy healthcare world that's changing so fast.
I think, it tells me they're not just sitting back and watching things happen. They're out there making things happen.
I agree. They're not content being just another, medical device company. They're embracing tech, making strategic acquisitions, and really focusing their portfolio on areas with the biggest potential for disruption.
They're going all in on innovation, and they're not afraid to make big moves.
Yeah, look at their push into hypertension treatment. It's a big gamble going after a market that's always been tough to crack.
True, but they're going after it with this technology that could change the lives of so many people.
Then they're not just focused on new products, they're making their existing stuff better, bringing in the latest tech.
Yeah, that ABLE ecosystem for cranial and spinal procedures. It's a perfect example, right? They're integrating AI and robotics and data analytics into those traditional surgeries.
Yep, all about improving outcomes and making things more efficient.
And their commitment to diabetes, right? It's not just one product. They're building a whole system to support patients every step of the way.
They want to be like the go-to for everything diabetes.
It all points to Medtronic wanting to be a leader in healthcare technology for years to come, doesn't it?
Definitely building a solid foundation for growth and, creating value.
Of course, there are always going to be risks, challenges, right?
For sure. Healthcare is changing all the time. You never know what might disrupt things.
Yeah, lots of competition, new technology popping up constantly.
And Medtronic has to keep executing, keep doing things right to reach those goals.
But from what we've seen so far, well, it seems like they can handle it.
I think so, yeah. They've got that track record of innovation, a clear vision, and that commitment to, both patients and shareholders.
So what's the big takeaway for investors?
I'd say it's this. Medtronic is changing, but it's a change that looks really promising.
They're embracing the future of healthcare, and they're doing it strategically and boldly,
If you're an investor who believes in the power of innovation, the long-term growth of healthcare, well, Medtronic is definitely a company to watch.
And that brings us to the end of our deep dive into Medtronic's Q2 2025 earnings call.
Yeah, thanks for sticking with us.
Hopefully you found our analysis, helpful and maybe even a little bit fun.
Right, and just remember, this is just our opinion. It's not financial advice.
Always do your own research, talk to a financial advisor, all that good stuff.
Absolutely.
Thanks for listening to Talk Tickers. We'll be back next week with another exciting earnings call breakdown.